Hello everyone and welcome to this week's Global Market Outlook. I'm Tolga. Equity markets lost traction, holiday shortened last week as renewed tariff headlines overshadowed a strong start to earnings season. Large cap US indices slipped, the dollar posted another weekly decline, and safe haven demand pushed gold to fresh records. Overseas, the European Central Bank cut rates for a seventh consecutive meeting, while China surprised on the upside with first quarter GDP growth of 5.4%. Looking ahead, flash business confidence surveys, a raft of confidence gauges, and another wave of blue chip earnings will test investors' nerves as they gauge how quickly the world economy is observing higher trade barriers and diverging policy settings. Last week, global risk appetite turned defensive. The S&P 500 retreated 1.5%, the Dow and Nasdaq each fell about 2.5%, and the dollar index slid to a 3-year low, now down 8% year-to-date, as questions resurfaced about the greenback's reserve currency appeal. Small caps broke the pattern. The Russell 2000 advanced more than 1% as domestic cyclicals benefited from stronger than expected US retail sales and a rush to buy autos ahead of looming import levies. Bond markets were equally unsettled. Comments from Chair Powell warning that higher tariffs risk higher inflation and slower growth triggered a flight to safety. Intermediate maturity treasuries led a rally that flattened curves even as gold punched through $3,300 an ounce, up 25% so far this year. In commodities, Brent crude eased on demand fears despite fresh US sanctions on Iran. Europe painted a different picture. Equities clawed back some of April's losses after the ECB lowered its deposit rate to 2.25% and signaled more easing ahead to cushion tariff-related weakness. The euro nevertheless weakened as German factory data stayed soft and consumer confidence dipped. In Asia, Japan's topics edged higher on tentative progress in US-Japan trade talks, though export orders continued to cool. Mainland China and Hong Kong stocks firmed after Beijing's growth beat solid March retail and industrial figures, but strategists flagged that the first quarter strength was front-loaded and vulnerable to the sharp increase in US duties. Across emerging markets, policy paths diverged. Turkey hiked its policy rate to 46% to anchor the lira, while Hungary's outlook was cut to negative by S&P on fiscal slippage. These moves underscored how protectionism and higher US funding costs are squeezing balance sheet fragile economies. Upcoming week, the data calendar is dense and global. Let's walk through the key releases. China opens the week with its long prime rate setting. No change is expected, but traders are alert for signals of an imminent reserve requirement cut. Shortly after, the US Conference Board Leading Index will be announced. It will be an early read on recession risk. It is expected to decrease. Thursday, updated consumer confidence figures from the euro area will offer the first sentiment read since the latest tariff volley. We will have plenty of Fed speeches during the day. Investors will be watching these events closely as we are down of the early May rate decision. Midweek is pivotal. Flash purchasing managers indices for the United States, the euro area, the United Kingdom, Japan, India and Australia should reveal whether new trade frictions are tipping manufacturing back toward contraction and whether services demand is starting to soften. Markets will use those price and activity components to judge whether the narrative is shifting toward stagflation or simply a temporary growth dip that central banks can offset. Wednesday also brings US new home sales data, giving a window into housing affordability as mortgage rates hover near 7%. On Thursday, Germany's IFO survey will show how Europe's growth engine is coping with softer export orders, and US durable goods numbers may be distorted by front-loading ahead of tariff deadlines. Initial jobless claims remained the cleanest high-frequency gauge of US labor resilience. Friday closes with Tokyo's inflation report, which could influence Bank of Japan rate expectations, together with UK retail sales and the University of Michigan's final sentiment index. With the Federal Reserve entering into its pre-meeting blackout after Friday's close, these releases and Fed appearances will shape rate expectations into the early May FOMC decision. Corporate earnings will keep headlines busy. Tesla reports on Tuesday, followed by Alphabet, Microsoft, Boeing, Intel, and a host of consumer staples. Margin commentary around tariff pass-through and AI capex will steer sector leadership, particularly for technology and discretionary shares battling cost pressures. Geopolitically, investors remain focused on the cadence of US-China negotiations, the second round of US-Iran nuclear talks, and any escalation in the Middle East that could jolt energy markets. To sum up, volatility remains elevated as tariffs, policy divergence, and key macro releases collide with a crucial phase of earnings season. Watch the flash PMIs and German IFO for the clearest signals on global momentum. Monitor Tokyo CPI and US durable goods for inflation growth balance, and stay nimble around big tech results that could reset equity risk premia. Watch for any final comments from Fed officials this week. The blackout period kicks in next week. That's all for this week's Global Market Outlook. If you found this briefing helpful, let us know in the comments and subscribe to stay ahead of the curve. I'm Tolga, and thanks for watching, and we will see you next week.